Wow, you can really see my pimple in this video. Okay, anyway, what's up everyone? It's Caddy with Money Investing. So, brand new setup and a better quality camera, better quality audio, and a pretty good looking studio, right? So what we're gonna do moving forward is this. So gonna be upgrading the quality of all the content moving forward. The audio, the video, everything is gonna be scaling up 10x. So hopefully in the future, you will get a better experience in watching the videos. In this video though, we are going to be talking about Applied Materials, ticker symbol AMAT. So we're going to be doing a complete analysis on this company. Hope you guys enjoy it. This stock has been requested by our members for quite some time, so I do apologize for not being able to cover it sooner. So I'm going to try my best to kind of look at this company. We're going to go over the revenues, earnings, cash flows, valuation. They did report their first quarter fiscal year 2023 earnings, so we're going to cover all of that. And hope you guys enjoyed this video and find it helpful. So without further ado, let's just dive right into it. The first thing that we are going to talk about is what does Applied Materials actually do. So they are in the semiconductor sector. They are a manufacturer equipment, services, and software in the semiconductor display and related industries. They pretty much have three different segments related to semiconductor systems, applied global services, and display adjacent markets. Based out of California. And the company does have pretty good, sustainable, consistently growing revenues, profits, and income. So when it comes to revenue, they have been able to scale revenues from $7.5 billion to over $25 billion. That's a compounded annual growth rate of just about 15% in the last 9 years or so. And gross profit has also grown from about $3 billion all the way up to almost $12 billion. That's about 4x growth for the company. Pretty cool. And net income and operating income has also grown. So operating income has pretty much gone 10x from 783 million all the way up to over 7.8 billion dollars. And then we've got net income, which has grown from a little bit over 256 million dollars to over 6.5 billion dollars. You got to bear with me a few times if I'm not looking directly at you, because I'm kind of still getting familiar with the camera positioning. I used to look at my computer webcam, but since I've got a new camera, it is going to be further up top. So again, bear with me if I'm not looking directly at you, but I am watching you without sounding too creepy. But this right here is going to be the diluted weighted shares outstanding. It's gone from 1.2 billion down to now under 900 million shares. So a huge green flag for AMAT because they are buying back shares. And then we've also got diluted EPS that's grown from 21 cents to over $7.44 per share. Absolutely phenomenal growth for Applied Materials in that regard. EBITDA has also grown from 1.2 billion all the way up to over 8.2 billion dollars, and phenomenal margins, right? 46% gross margins is what we're dealing with. By the way, I didn't mention that their net income has grown by over 46% compounded annually over the last 9 years, and their gross profit has also grown by over 20% on a compounded annual basis over the last 9 years. Margins, exceptional. So EBITDA margins are sitting on over 31.5%, net income margin 24.5%, free cash flow margin just under 11%, and absolutely phenomenal return on common equity, return on total capital, and return on total assets for the company, all above 25, 26%, in some cases even up to as much as 51% for the company. Now, moving forward to their longer term plans, they are expecting this semiconductor market to grow into $1 trillion market by 2030. And semiconductor roadmap inflections are increasingly enabled by Applied Materials technology, and they are heavily investing in manufacturing, research and development, logistics, and increasing their productivity as well. And this right here was their first quarter fiscal year 2023 numbers, which just came out a few days ago. And you'll notice that they reported $6.7 billion in revenue, up 7% year over year. Gross margins was slightly down, 0.5% down there. And operating income was flat year over year to coming in just shy of $2 billion, with EPS up 7% year over year to just over $2 per share. Operating cash flow down slightly, 15%. And free cash flow still very good margins, $2 billion. That's very good margins there, but still down 21% year over year. And this right here is going to be their balance sheet. So if you take a look at the cash and cash equivalents and short-term investments, they're sitting on just about $4 billion, give or take, in short-term investments and cash. And their long-term investments, which is also going to be on their balance sheet, sitting at just a little bit over $2 billion. So all in all, when you combine those two numbers, they're sitting at $6 billion worth of cash and short-term investments and long-term investments. And their long-term debt right now is sitting at just a little bit over $5.4 billion for the company right now. So absolutely phenomenal numbers there. Again, short-term and assets and long-term assets and cash sitting at over $6 billion, long-term debt sitting at just under $5.5 billion, and they've got short-term debt of just about $200 million. So they've got a negative net debt, meaning they've got more cash on the balance sheet than debt on the balance sheet. And moving forward, this right here is going to be their valuation. So right now, to be honest, we're dealing with a company that has consistently growing revenues, consistently growing earnings, excellent margins, consistent share buybacks. We've got a great balance sheet, more cash than debt on the balance sheet, more current assets than current liabilities. So current ratio is positive and over 1. Total assets also exceed their total liabilities, and the valuation is quite reasonable, trading at about 14 to 15 times earnings and a little bit over 3 times sales. Price to cash flow at over 14 and 18. Enterprise value to EBITDA trading at just about 11 to 13 times, which again, very, very reasonable valuations. However, it's not all perfect. When it comes to the EPS estimates moving forward, they are expected to grow earnings from $7.07 to as much as $9.65. And that's a compounded annual growth rate of about 8%. So that's not the best. It's not the worst either, but it's definitely not a growth stock. So 8% is the expectations for earnings. And if we kind of plug that in to our intrinsic value calculator, so I'm going to bring that up very quickly. I've already done some analysis on it, but if we kind of bring up those numbers, that's going to be about an 8% growth compounded basis over the longer term. And if you plug some of those numbers in, 8% growth rate for AMAT, 15 times PE multiple. So going with a little bit of a higher PE multiple, giving them a PEG ratio as close to 2 as possible. Still a little bit unfavorable, but going with that ratio, discount rates 12%, margin of safety 10%, and we get a share dilution of negative 1% because they have consistently been buying back shares. We get a fair value of just about $83.64. And right now the price is trading at about $111 per share. Doesn't quite make AMAT too overvalued because that flexibility range also puts us at roughly around $87 on the higher end. But this is a company that I'm actually super interested in if and when it drops down to low 90s or even down to low 80s. I will be interested in selling maybe a cash secured put on this stock to take advantage of this potential opportunity. Now, it was trading as low as $70 back in October, and since then it has rallied quite a bit. I mean, it's pushed up, over 60%. And this is going to be the entire technical analysis with a very strong support for AMAT sitting roughly at around $110, $111 per share. So you'll notice that we have been validating that level quite some time. Previously, we have gotten rejected at that level. So old resistance level turning into a new support level for AMAT. And of course, if we do see some more pullbacks, the next support really is going to be sitting roughly around here at $92, all the way down to the next support down here at low 81. So those are some support levels that I will definitely be watching for AMAT. And this is a company that is definitely going to be on my radar considering everything that I've learned and researched about this business. Let me know your thoughts on Applied Materials. Are you buying, selling, holding? What are your thoughts? But for me, my fair value is going to be at low 80s, and this is going to be that sensitivity grid. If anybody's interested in kind of pivoting to a higher growth rate, lower growth rate, higher or lower P multiple, you can check this out and do the analysis and make that decision for yourself. And again, hope you guys enjoyed this video, found it helpful. A little bit of a different format and different sort of studio setup. And I hope you guys enjoyed it, found it helpful. If you did, make sure that you drop a like, subscribe, and hit that notification bell so you don't miss out on any future market updates and videos. Discord and Patreon links going to be down below. As always, happy investing, and I'll see you all in the next video.